This is ball. Let's say I drop this ball into the bowl. It may hit any side of the bottle at first, but eventually it will roll towards the center of the case and come to a stop there. And this happens because of its structure. And it will be like this in the end, even after several attempts. This is what would be known as a stable system. Trading is an environment of constant decisions, and it starts from whom do you pay attention to, what information do you validate, what holds more significance for you, when should you stop, when should you stay still, for how long, when to take action, and when you take action, what level of risk do you assign to that action, where do you enter, where do you exit, how much uncertainty do you tolerate, and many more decisions that become unconscious but are part of the entire interaction with this trading activity. In the end, channeling the decisions you are making, both conscious and unconscious, inside and outside of trading or the chart, aims to answer and improve questions. Like, how do I choose correctly? How can I have the best psychological training when trading? How can I trade more efficiently? How do I become profitable? Trading systems and strategies are, at the end of the day, decision-making models, and these have utility and are necessary. That's why everyone talks about them and everyone seeks to have their own. And you must understand that the reason is that trading is a complex and random environment, full of uncertainty, and it really has no order. In other words, it is a chaotic environment. What you constantly find on the internet, whether in courses, systems, strategies, or methods, are finished products created by people who built a structure with the aim of having more order, but this order is not because the market has naturally stopped being chaotic. But that order is manageable only for the individual who has structured it, but whose conditions are most likely very different from yours. In this video, let me explain why the models or structures that can be created and have millions of possible combinations in trading are often very far from reality. They force you to think in a prescribed way and position you on the side of the majority that loses in this activity. There are two concepts you need to understand to differentiate systems, and these are structure and dynamics. First, structure, that is to say, what are the parts that make up something. For example, a tree has roots, a trunk, branches, leaves. That would be its structure, and dynamics would be how that tree changes through different processes over time. That is, the way the tree grows can be cut down or knocked down by a hurricane. Depending on where the tree is, it can become firewood or wood to build a house. The same tree changes through the seasons. The tree can be attacked by pests, etc. Therefore, dynamics are what can happen to a tree. This is different from its basic structure, which is constant and natural. Understanding this is crucial as it will allow you to have more clarity when developing a simpler and more objective way to make decisions. When you are trading and based on what those decisions are. That is, knowing clearly why you have chosen a trading system or method due to its actual structure, and not due to any other subjective external influence of someone who told you that it is better. There are two types of systems, stable systems and chaotic systems. This is a ball, and let's say I drop this ball into the bowl. It may hit any side of the ball first, but eventually it will roll towards the center of the ball and come to a stop there. And this happens because of its structure. And it will be like this in the end, even after several attempts. This is what would be known as a stable system. On the contrary, if we take the same case but invert it, meaning we change its structure and perform the same action, dropping this ball, it could fall on the same side but not move in the exact same direction. The variables that make it move in one direction or another are due, for example, to the launch force and the surface where it falls. But unlike a stable system, this structure makes the directions the ball can move to be unstable. That is, they are chaotic directions, and therefore, this would be a chaotic system where even small changes can trigger completely different results. That's why when dealing with or within a chaotic system, there must be limitations on the predictions that can be created with any kind of knowledge. The same applies to simulations related to economics, money, and investments. It is chaotic. Therefore, even if you have a very detailed and perfected simulation or backtesting and have spent time on it, you must consider that there will still be a deep level of unpredictability in creating systems. There are three types of structures: agents, networks, and layers. Agents can interact with each other or independently. Networks are those that have a type of connection or relationship with each other. Layers are those that are derived from each other, where the second layer depends on the first. Likewise, the third layer depends on the first two to exist. Technical analysis is based on connections between fundamentals, different time frames, fractality, leading individuals, to try to find a connection or a network or convergence to make a buying or selling decision. Strategies based on shapes, indicators, and theories follow a layer process where you have to wait for a series of steps to happen before validating the opportunity for an entry. That is, the first step must be fulfilled before moving on to step 2, then to 3, then 4, 5. You cannot enter at step 5 if the first 4 have not been fulfilled. You cannot expect step 4 if the first 3 have not been fulfilled. If the first 3 steps are not fulfilled, technical analysis or network systems, as well as strategies with fixed backtested parameters or layers, lead you to try to develop stable systems. That is, if you find the same convergence or network or validated layers that all subjectively meet, that's when you take action. After taking that action, the market will have a stable reaction, meaning what the strategy dictates will be fulfilled. In this way, without being aware of reality, you assume that you will ultimately be a winner because the system is stable and it will be fulfilled. By categorizing the market, which is inherently chaotic, with a network or layer system, this business is manipulated. And by being manipulated for us consumers, it becomes a chaotic, not stable environment. Many talk about manipulation but still try to confront this reality with stable network or layer systems. They talk about institutional trading when facing the market. If you notice, they try to do it with defined strategies based on a series of networks and layers with ultimately subjective structures. In essence, it's the same problem. This gives us 3 important dimensions to be aware of when trading and systematizing. First, there is a relationship between the local and global dimensions. Locally, you are observing moving averages, drawing lines, combining time frames. This dimension is what you project onto the chart in front of you. Simultaneously, in the dimension you are not seeing and cannot define. It is the global dimension and how it will affect the local one. So, a very elaborate system full of past data is not necessarily more effective when these dimensions are constantly interacting with each other. Stable systems, such as network or layer systems, lead you to want to enclose the market in order. And when you believe that there is order, then you act in the only way possible to maintain that order, which is obedience. But obedience does not feel natural in something that, although it obeys, ultimately changes. If you realize, that's why everyone talks about obedience, and that it is only through obedience to a simulated order that is believed to have been discovered. It is asserted that money can be earned, and it is the path to the reward of financial freedom. But the problem is that banks, the owners of the financial system, have true access to money and information, giving them the power of order and control. However, for us, who are consumers of this business, it becomes disorder since the order you think you have discovered is disordered by the influence and advantage of the true owners of the business. That's why we are in a dimension of order and disorder. The media manipulation of the business owners leads you to believe that trading is a cooperative environment where technical analysis and popular strategies are the basis for everyone winning. That's why it is believed that if information is easily accessible and shared, everyone can learn and make money. But the reality is that banks operate in a competitive environment where their information and financial advantage lead them to outperform the majority, ensuring their survival and success in the business. So, if you have cooperation and competition dimensions constantly interacting, you cannot expect to become a winner simply by learning what the majority learns and shares. What I want you to understand is that network or layer systems are not inherently bad or cannot be useful in facing the market, but they are very complicated to find, maintain, and have their profits exponential while working the same way for different individuals with different circumstances and ways of thinking and feeling. So, I will explain why breaking these popular paradigms and viewing the market from another perspective can make your trading more objective, simpler, more profitable, and less addictive. Therefore, we have elements like agents, networks, or layers where layers tend to be more rigid, and agents are more flexible. Agents become more logical when developing a systematic way of trading, considering that the environment is chaotic and not ordered because they are constantly flexible. Have you heard me talk about the principles of price, time, price, probabilities, and manipulation? In this chart, notice these two axes, time below and price on the right side. This creates an area within the chart at all times, derived from these two entirely numerical data. Realize that each area can become an agent that does not depend on a layer or network to exist. So, each agent is independent and can be useful at some point. Some agents contain candles or bars within them, and others do not. That doesn't make them agents, it's the numerical structure of time and price. Note that the structure is the same, even if the dynamics change. If I mark any area, observe how the dynamic movement is different within it. But the structure remains the same. No matter which area I choose, the structure is the same. Although the dynamics are different, marking an area, notice how the price eventually moves either up or down. If I mark this recent area, the price will have to go up or down from that area. Over time, we see how the price moves down, and each new marked area has the same potential dynamic. The price can go down or up. When it reaches another area, the price can be up or down again based on that area, and so on continuously. Therefore, you can see the chaotic system we are actually participating in. Every new movement can go up or down, depending on an area. Remember the example of the ball to explain stable and chaotic systems. When we invert the ball, the system becomes chaotic because the marble can go in multiple directions and degrees independently of the area. However, in the trading chart, there are only two directions, but the price can go in one or the other at any time since it is a binary environment. The price can go up or down. You can buy or sell. In other words, the environment is chaotic, but its possible outcomes can only be two. So, it's like this branching. If you notice, this area can have two outcomes. Then another new area or another agent can also have two probable outcomes over time. This leads you to adapt in the branching of movements that ultimately are chaotic. You can adapt and literally use any, it doesn't mean you'll be entering blindly without numerical sequencing. But the important part is that when deciding on one of these agents, it doesn't have to do with some subjective form or validation by networks or layers, but with numerical processes based on the four principles. This way, you will always have a systematic way of entering the market and following it. But it doesn't depend on a loop, it depends on the constant movement of the price, which never stops. Stable strategies lead you to wait for a series of steps to make a choice. But I want you to realize that even a choice based on network or layer structures ultimately has an agent structure and derived from the agent. The price can only be up or down. Let's say you have this moving average crossover strategy with Duncan channel and RSI. Say the entry to start a trade as a layered system structure is that the moving average must cross the orange from below to above or from above to below. Let's say we start looking at the market here. Here's when the price is below the blue moving average. The orange line is crossing below. The price has gone from one extreme of the channel to the other, and the RSI is below 50%. Notice how layers work. So finally, you are highlighting from the entire chart. This moment here is crossing the moving average. The price is closing below. It's touching one extreme of the channel. It goes to the other side and is below 50% of the RSI going down. That is your entry. This is how everyone will teach you. The problem with this is that it locks you into a loop where all you have to do is wait for the moving average, then wait for it to cross. After touching one of the channel extremes, after the RSI is below 50%, and after a candle closes below, you enter after the close. This is just an example, but all strategies related to layers, networks will lock you into this loop where once you enter, you win or lose, and you have to wait for that configuration again, entering the same loop. And that hope is what most people seek to win, to have consistent results and different outcomes, and to make trading an activity that changes their lives. But you have to realize that everyone is trying to find a stable system in a chaotic environment. The same happens if you do it with a network system where you have to find convergences and a connection with many things to then define when you will enter based on a network connecting different tools or analyses or theories to finally say that the market is fulfilling something that you are simply validating. Whether you use a layered system-based strategy, meaning one layer must appear first so you can follow the second layer, and this is the third layer of the fourth layer, and the fourth layer depends on the third, just as the third depends on the second, etc. It could be a trend line or using Fibonacci or retracements. You use supports and resistances to react to movements. What I want you to understand is that regardless of how much effort you put in, you see that this is numerical information. And in the end, even if you reach that conclusion based on all those lines and tools you overlay, you can simply realize if this is the one you choose because that's where the market stays in consolidation, or because finally this decision-making candle, that independent agent, appears. At the end of the day, sometimes the price keeps moving down or changes. So I want you to realize that the chaotic movement, but ultimately binary in nature of the price, can move in either of the two directions. So when you train yourself to adapt to change, it's different than when you learn a course, a strategy that simply leads you to obedience, but mostly to mediocrity and always consuming more and more information from all the internet. Because you think you have to find a stable system, and that will give you financial freedom. And if you notice, if you go looking for strategy after strategy, buying course after course that teaches you a strategy, all you are doing is changing loops. But this is very complicated to maintain in the long run and to finally have different results than the majority. What happens when we visualize that structure and detect that independent agent? We see how this independent agent, based on a numerical structure, the price is going down. It can also go to the other side, which is what allows you to see the market with independent agents, because you are not simply doing backtesting and tests, saying the price has already made this structure, this network or this layer series to converge. The price can simply be down, but it can also go to the other side. The agent allows you flexibility and adaptability and layers not, but at the end of the day, while you believe the system worked because your expectation is being fulfilled, the price can go to the other side. And also, in the end, this same agent can work to keep selling or keep adapting to the movement. Therefore, the most important thing is that if we then eliminate these indicators, taking off any line, anything you trace, if you validate these candle patterns or tick candles, the numerical structure is the same, even if the dynamic movement changes. Obviously, I'm not mentioning the principles of probabilities and understanding manipulation, which are the two objective principles that help you be able to adapt to the present without needing convoluted convergences or backtesting. 3. Enter with smaller stops and larger moves, without needing subjective structures based on the same network and layer structures that lead you to want to trade stable systems in an actually chaotic environment, and are also full of beliefs and are the raw material of 99% of people who teach trading. As you can see, it's about being able to choose based on numerical processes which area gives you the least risk and the highest potential gain, because you are going more likely in the direction where banks will be injecting more money as independent agents. Therefore, it doesn't depend on what you believe, think, or validate, but on information that allows you to adapt to change. Subscribe to the channel, as I will be making more videos explaining how to understand and improve the systematization of your trading and why most of what you are following and learning will not give you tranquility, objectivity, and will keep you looking for a stable system when, in reality, you are in a chaotic environment. Follow me on social media so you can get my book, which will help you understand many things that you won't hear anywhere else. And remember, trade with logos, trade with logic. Until next time.